There's one stock that is the buy of a century, in my opinion. It recently had 14 billion of revenue, recently had earnings results, which is a 10 to 12% increase year over year. Importantly, they've announced 4 multi-billion-dollar contracts that are to be fulfilled. So the stock is Oracle, ORCL. It's been in the news recently for TikTok divesting from ByteDance, and Oracle, I suppose you could say, acquiring TikTok. Not an M&A advisor, but let's take a look at the stock chart and a little bit of info about those multi-billion-dollar contracts with Microsoft and Amazon and more.
This is Sam Putnam.
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 So I don't want to misstate. It's possible those contracts are not with Amazon, but there's only so many companies that are going to spend billions of dollars with Oracle. So it's similar to the Nvidia situation where they have very few customers, but they're very valuable. They did have some recent changes, but this was just, in the last week, and it's sort of dipped down and offering another opportunity here. It looks like it's going to settle around this 280 level. And if we zoom way out, we can see that we are basically in complete uncharted territory here. So this is an exciting opportunity to get in after this dip on this revenue with an insane amount of volume, like way more than Q1 earnings, Q4 last year, etc. So not only is this double the volume of Q1 earnings, it's, quadruple the dollar volume, the amount of money actually pouring into the stock, because the price is doubled basically. So this is an exciting time. We've got a dip here. If someone did buy the first dip, they got shaken out, and now there's another opportunity to buy with low risk, which is what we're all about. Buy, risk a few dollars, and look for a $30 bump up to sell half your position, and then 30 more or more. You can just hold the rest and see if you can hold this for over a year and get those cap gains. Not always, but sometimes even a few months is enough. So they are doing this restructuring. This isn't super exciting to talk about, but layoffs don't always hurt the stock price, be that as it may. And they are sort of at the heart of automation AI. So it's unsurprising to say that they might have fewer employees. It is what it is. This is a lot of demand. $90 billion for selling $20 billion of basically agreements. There's a lot of interest in this company sticking around, it sounds like. This is the stake, a little less than half. Joint venture. This is a huge VC firm or whatever they call themselves. And then someone in Abu Dhabi, which must be equal or equivalent assets under management as this other one. It doesn't really matter, but Oracle is the one who got TikTok, okay? So that's not super material, I don't think, to the stock price. I mean, that did just happen, but since then that hasn't really helped the price. So I'm not sure we want to look to updates on that to be an indicator that the price is going to go up. Now, the real story here, in my opinion, is not the TikTok thing, but rather this sort of AI Nvidia connection, okay, which continues to be the driving force in the market, okay? And here's the connection. Nvidia is going to invest up to $100 billion in OpenAI as these GPUs are essentially deployed to allow OpenAI's models to run on them. Now, you might say, what does that have to do with Oracle? Well, OpenAI is going to lease basically servers from Oracle as well, and it's a big commitment. So Oracle committed to purchasing 40 billion of Nvidia's chips, and then that's for the data center, and then they're going to lease that to OpenAI under 15-year agreement. So that's a long time. 40 billion over 15 years might not sound a lot for a company the size of Oracle, considering they just bought, I don't know what they bought TikTok for, but 45% stake in TikTok. This was not cheap. This must have been in the, yes, $14 billion. So it was a little less than half of this 15-year deal that they just took place in. I guess they only bought for $7 billion, but I just want to ignore the TikTok thing. I don't think it's material. I think this is the important situation is this Stargate project going to result in more massive deals? We just saw Meta spending $14 billion on CoreWeave, doing a deal with CoreWeave. Actually, Meta stock price went down, but the CoreWeave stock price went up. So that's important because CoreWeave is getting the money. And CoreWeave had $10 billion of debt, and that seems to be not a problem anymore when they just got a $14 billion deal. Oracle had solid revenue numbers with these big multi-billion-dollar year agreements. This is the section we want to look at, remaining performance obligations. Almost $500 billion, up 400% year over year. This is an insane, this isn't necessarily revenue because it's not realized, but I mean, compared to 15 billion of revenue, which is already up to more than 10% year over year, also having about, what is that, 20, 30 times that revenue that they still have to fulfill. So it's an insane amount of demand. It's no surprise this stock is on an absolute tear. And once again, 130% as Nvidia breaks out, all the stocks that are having the same opportunities as Nvidia, with the OpenAI deals continuing to get inked, and OpenAI is really, you could say, under the umbrella of Microsoft, because Microsoft gets almost half their revenue. But we don't have to pretend we're in these conversations with all these big name venture capitalists. All we have to say is, here's a little spot to jump in, risk a few bucks, and it looks like there's a pullback opportunity that people who missed this earnings spike, hopefully a ton of people missed it, because you really shouldn't be buying before earnings because you don't know what earnings are going to be. This could have just as easily gone down like a lot of software stocks did, but this was a huge piece of information, this $455 billion of remaining performance obligations. So those are the 4 multi-billion-dollar contracts, and that's $500 billion of obligations. It's not like a binding that they're going to get that, but they have been selected, it seems like you could say. And their forecast went up 18 billion, with expectations to basically double that, triple that, and just continue up over the next 4 years. So I assume that means per year. So if that's true, if that is actually each year the revenue expectations doubling, that's absolutely an insane story for the stock. But even if it isn't, this is just its cloud revenue, by the way. That's still an insane big growth story. If this is, basically a growth of 20% a year or something like that, just in this segment, whatever it is, it's already booked. So the stock's probably going to move based on that $500 billion number now. Okay, so we're getting an opportunity to act on the information before it gets totally sort of agreed upon by the market. Obviously, it's already been disseminated. Everyone can read that as soon as this came out, but there's a little bit of noise with the whole TikTok thing, and now it's sort of settling, and people are, buyers and sellers are deciding, is this actually worth anything related, anything close to what that euphoric buying on earnings indicated. So we'll see what happens. This is a remarkable growth, no question. And this is an insane number of data centers. Considering I have to expect each of these costs like $500 million or something. Don't quote me on that, but that's the earnings. And we did talk about that bond raise as well. So that's a big deal, having some more cash on hand specifically earmarked for building out these data centers. So this is the absolute biggest of the big leagues. This chart is absolutely powerful and I would say euphoric, except that indicates that this could come down at some point, and I'm not really seeing evidence of that. It more looks like a pullback. This only moves 5% a day, so that's enough where it's interesting, but not enough where it's seemingly unlikely to be, continued. For example, this IRIN and this SIF are these Bitcoin miners that have transitioned into AI, sort of jumping on the bandwagon. It's a good idea. Of course, there's higher revenue margin on AI rather than mining Bitcoin. They have some significant dives. I mean, 18 to 12 in a day. Like, you're just not going to see a 40%, 30% decrease in a day. It's gradual. So you can get in this. You have some safety margin of error. You risk $3, 5%. Maybe it does go to 5% in a day, and you take a paper cut. And more than likely, well, not more than likely, but there is a good chance that if you get in, you can risk $3, $4, make 30, sell half your position. Maybe it goes up here, maybe it comes back a little bit, holds a higher low, and then eventually at some point you're up here in the 350, 400s with half your position remaining, which gives you a pretty solid $50 per share gain. I don't want to keep those lines in there because I'm not here to be an astrologist or anything, but that's the stock idea. If you like talking about stock ideas that are timely, head over to stockscommunity.com. You can try it out for $25 for 7 days. It's just a trial. It keeps the bots out. It's also sort of a way to not have a trial that's like $1. So you just have a bunch of people jumping in there who might be looking for like a day trading room. This is not a day trading room. These are stocks that you can hold for 3 to 5 days and then a month and then in some cases over a year. So that's what we're all about. If you like these videos, hit that subscribe button and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Let's